What's up, guys? Welcome to another episode of Invest Iowa. Today we have Melissa Figueroa with me, and we're gonna talk about lending and first steps to buy your home and all that good stuff. So, thank you for coming, Melissa.
Absolutely.
So, if you may please introduce yourself. Who do you work with? What are you doing exactly right now in the Des Moines area?
Yeah. Well, I am Melissa Figueroa Rivera. I work with Green State Credit Union. I am a mortgage lender, mainly working with the Hispanic community, though I help everybody I can. Been there for a year. I was with Collins Community Credit Union before, doing the same thing.
What? How long have you been working for Green State?
Green State, 1 year actually.
1 year, fairly new. Okay. Could you give me a little bit of background on how you got started into the lending world?
Absolutely. I've been in the banking world forever. I started working as a teller in New York City for what was Wachovia Bank back in the day. Won't tell you the year, so I don't want to age myself. But I've been in the banking world forever. Then I decided to move to West Des Moines, and I moved here from New Jersey.
Oh, wow.
It was a huge change, but it was great. I started out with a bank on the retail banking side, kept moving up, got to the assistant manager position, and then decided to make a change. That's when I started working for my first credit union. And after 4 months in the retail banking side, just decided to explore the mortgage side, and here I am.
And here you are now. Green State for now 1 year. Okay, how's that relationship with the bank? What are you looking at the current market? How's that going in terms of?
It's great. Green State is a great place to work at. I should just say it's a great lending institution. The market is the market. It'll go up or down, it'll happen. But Green State has great programs that can help people that right now maybe think they can't do it. We can be pretty lenient on our in-house program, but overall we can help anybody. Maybe people that go somewhere else have been denied before, and maybe we could do it. So it's a great place to work at because they're committed to helping people no matter what. So no matter your age, gender, no matter your race, we'll help you.
Interesting. So when you talk about those programs Green State offers, what do you mean exactly? That is it because people don't know that they exist, or is it?
No, we can help people that won't necessarily qualify on a conventional program. So we have different programs than any bank that out there. Actually, any financial institution has different. Everybody has different programs. But with Green State, because of our commitment to helping people, we have different programs where we're able to help somebody who won't necessarily qualify if they went to a bigger bank.
Maybe because of credit score?
Not necessarily. Credit score requirements are the same in every lender, I would want to think. But because when you go to a bigger bank, they are by the book no matter what. So if you don't meet these requirements, that's it. I'm sorry, I can't help you. And with Green State, we tend to think outside of the box. So it's not necessarily that this person won't qualify somewhere else. It's just that they're so by the book that someone who made a large cash deposit, if they go and apply to U.S. Bank or Wells Fargo, they won't qualify because they just made a large cash deposit. So things like that, not necessarily credit score, income, but other things that can be thought about in a different way.
That makes sense. Okay. And with regard, what is your experience helping people? I guess could we talk about one particular scenario, like not giving names or anything, that you think that is very interesting, that most people generally will think that wasn't possible, that you have helped?
Oh yeah, there are a lot of misconceptions out there. People think they need a huge down payment to qualify for a mortgage loan, and that's not true. Not necessarily, depending on your situation. Someone with a 3 or 5% can qualify for a mortgage, buy their home without an issue. But here they were waiting for 5 or 10 years because they thought they needed to save. Another thing or another misconception is credit score. People think I need a 780 credit score. That's not very common. Um, so just a lot of misconceptions. People think they need a perfect credit score, a lot of money to buy a house, but that's not necessarily the case.
Hmm. Interesting. When you talk about 3 to 4%, are we talking about FHA?
Not necessarily. There are other programs
There are
like
other
Home
programs?
Possible, Home Ready, that they'll just ask for 3%. FHA will ask for 3.5.
Okay, could you go a little further into those? Because I'm not familiar with them.
They're just programs that are a little bit more affordable. These programs they'll be sold on the secondary market to an investor, but they'll require a lower down payment. So 3%. Typically, interest rates a little bit lower, just because it's an affordable product. But as there are some income requirements, so they can't make more than a certain amount of money and things like that. But it's doable.
It is doable. With regards to your experience, again, um, as a banker, do you qualify for your loan, your personal loan? Um, does the Green State Credit Union offer better programs for workers?
No,
No,
it's the
it
same.
is the
Yeah,
same.
yeah, it's
I
the
was
same thing.
Then that's a misconception. Somebody told me that, and it's completely wrong there.
I that might be illegal. It's the same, so I have to meet the same requirements you would need to meet.
Gotcha. Okay. I had a guest. He was a real estate agent for our realty group, and we touched based on ITIN number, right? So I know that a lot of people out there can identify with not having a social security number, and that is such a deal breaker. Let's say that you were born in somewhere outside of the United States, and then you were brought here when you were very little. Your entire life you've been here, right? But you don't have any papers, but you're technically from here. How does that? How do those people go about um, having an ITIN number and getting approved for a house?
Well, that's another misconception. People think they need a social security number in order to apply or qualify for a house, and that's not true. We do have programs to help anybody with an ITIN. So basically, the ITIN number is just a number that someone undocumented will get from the IRS in order to file taxes. So as long as they're filing their taxes, working, and we can verify their employment, we can help. Actually, we have programs where we can offer 100% financing to someone with an ITIN. That is something huge,
Wow.
because someone that thinks they can't get a house because they don't have a social, and all of a sudden be able to buy a house with no money down, that's a huge opportunity.
I didn't know those were possible.
It is. It's possible.
Well,
I've done many of these loans, and actually, there's scenarios where they take money back with them. So it's incredible. They don't pay down payment. They don't pay closing costs. Not that we don't charge them, but they get enough credits with that program that they end up paying nothing and taking some money home. So I've had a lot of happy faces leave my office.
Well, that sounds like a good deal. I guess why will be someone be interested in this type of financing?
What do you mean?
As in, like, why would I want not to put it? So when we talk about no down payment, what are the benefits? Or, well, I guess not having the money up front. Is there any? Is there a catch in there?
No, there's
No.
actually no cash. So, um, someone who would be interested in not putting a down payment is someone that's buying a house that maybe needs a little bit of work or don't have the cabinets they want or something like that. So maybe they have a little bit of money saved, but not necessarily use it for down payment because they'd like to fix the house a little bit before they move into it. So that's a scenario. Or let's go with the single mom that doesn't make enough money to support her 3 children, but has to buy a house because rent keeps rising every year. So the little money that she has saved, why would she use it for down payment if she can qualify to buy a house without it?
That makes a lot of sense. And we're talking about big banks not being able to underwrite these deals because this financing programs, they just won't.
Well, um, I guess it has to do with the lender. Um, are they willing to take a risk? Because it is a risk. Think about it. A lender is lending 100% of the value of a home to someone that they don't even know if they're going to pay. So it requires a little bit more digging into. I guess we have to, and when I say we, I mean the lender, processor, underwriter. It's a whole team behind making this happen. So are we just have to do a little bit more investigating. Like, how do we prove that this person is going to pay us back, is going to pay on time, won't have any problems paying 100% of the value of this house?
Yeah, that makes sense. What do you think are some misconceptions that people that are still renting don't know about buying a home?
Number one, down payment. I think people think they need to give 20% down, or maybe back in the day it was a thing,
Hmm.
right? But think about it. Who has 20% of a purchase price to put down? It's too much money. So I think down payment is a misconception. Credit score is another one. Um, I think those are the biggest ones.
Biggest ones.
Hmm.
Is there anything else that is stopping people from buying, from your opinion?
Not having the right facts, like not knowing all the programs available, different lenders out there, what everybody can offer. I think it's a great idea to shop around. Some people just go to one place and, oh, okay, so I don't qualify, fine, or I don't have enough for down payment. But they don't know what's out there. They don't know what everybody can offer.
So you are saying explore your options.
I would say it's a great idea. Explore your options. Always see what else is out there. Don't, just because one person says no, that's not necessarily the case.
Is it okay for somebody to talk to lenders just to ask questions? Do they have to be far ahead in the process of knowing what they want?
Oh, absolutely not. Just wanting to buy a house is reason enough to talk to a lender. See where you can get started. What do you need in order to qualify? How do you get started? It's just like when you have a headache, you have a headache for a few days before you visit a doctor, right?
Mhm.
But when you visit one doctor and the doctor says, "Oh, okay, it's just a headache," and after 2 weeks you still have the same headache, do you visit a different doctor, or do you just stay there because the other doctor said it's just a headache?
No,
You
different
start
one.
exploring other options, so you get a second opinion or third. Same thing. Same thing with lending. It is the biggest investment of your life. Why would you just stick to one person that's telling you no?
What do you see in Des Moines? What do you forecast? I know that we can't see the future, and these are just opinions. But what do you think it's gonna go down in then 2023 with regards to like how the market is reacting with lending?
The market is the market. It always go up or down. But I think that as we get out there and educate more people will want to buy a house, or more people will see that it's possible, that it's an option for them.
Oh, this brings me back. Interest rates. Um, well, this anybody's gonna tell you, oh, interest rates so high, interest rates so high. What are your thoughts on this?
Interest rates normal. We're just coming out of a 2 year pandemic. That's still going on, but now it's our new normal, right? But we're coming from this 2 year pandemic where we saw interest rates at 1.99 That's something that was not seen in how many years. So interest rates right now are what they were before the pandemic. So we're in
We're in
we're in
back
the
to normal.
we're back to normal. It's just that people, or we all got used to those lower rates. Lower rates are rates. They'll go up, they'll go down. So the time to buy a house is always when you're ready. Forget about what the market's doing. Because if you buy with a high interest rate, or what you think is a high interest rate, when they go down, you can always refinance that mortgage loan. In the meantime,
Mm.
you've paid, or you have equity on a house for you. You bought a house for you and your family. What happens if you don't buy because the interest rate's too high and you're renting? In those 2 or 3 years that you're waiting for interest rates to go down, you've been paying your landlord's house.
Hmm.
So
That was interesting. The best time to buy a house is when you're ready. That sounds,
absolutely,
I mean, it sounds dumb, but it's so true.
yeah, it's true.
Wow. Um, what do you, what are your expectations with W-2s? How often, how long does a person have to be working in order to qualify for a loan? If they just, is it a period of 6 months, 1 year?
That's a great question. Every lender out there will ask you for a 2 year work history. No ifs or buts. So you have to have at least a 2 year work history in the same line of work. So you can't be a cook for 6 months and then decide to go into construction and work for a year and a half. You have to have a 2 year work history in the same line of work.
Hmm. What about self-employment?
Same thing. Same thing.
Same thing.
Difference is that when you're self-employed, we will ask for your tax returns for the last 2 years to check what that income is. If you're not self-employed, you'll have your W-2s to prove your 2 year work history.
Is this where writing things off will affect the amount of money that you get approved for?
Well, when someone is self-employed, the income that we will look at is whatever is left after your write-offs, or expenses that you had for your business. So I know there are a lot of people that just write off a whole bunch of things so they don't have to pay the IRS that much, but they're affecting their overall income. Now, the disadvantage of that is that once you file your tax returns, that's your income for the whole year. It's not like you can come back in 2 months and say, well, my income changed. No, it is what it is. That's what you filed. So when a self-employed person does not qualify right now because of income, they'll have to wait another year to see if their income on the next year was better. Now, the advantage of that is that before you file your taxes, you get to think about it.
Mm.
Is it worth paying a little bit more to the IRS so that my income shows better on the tax returns, or not?
That's a solid point. I guess what's your advice for self-employed
The more
people?
income you show, the better.
The more income you show, the better.
Mm-hmm.
We can't talk about numbers, right? It's
No.
very relative.
It is fraud if I give you a number. But no, the more income that you show after expenses, the better. So we will qualify someone based on their income and debts. So the less debt, the better. The more income, the better.
The less debt, the better. The more income, the better.
Well, other requirements for someone with an ITIN number, aside from the 2 year work history that we could verify, is they're actually the same. They're actually the same for anybody with a social. 2 year work history, valid ID. They'll need their ITIN letter, which they get when they get their ITIN number, and they'll have to file taxes. So we'll verify a 2 year work history and ask for 2 year tax returns. There are cases where we can use just one, but it depends on
1 year.
1 year tax returns, but it will depend on their work history. They have to have a 2 year work history no matter what. Self-employed, 2 years no matter what. And if someone doesn't have credit, which is pretty common with ITIN holders, not all of them, but it's pretty common for an ITIN holder to not have credit or not have enough credit. So when we look at the credit report, we look that they have at least 3 debts in their name that they've paid on time for a year. Sometimes they've had debt for 3 months, or they had a loan for 6 months, paid it off, and that's it. So what we do in those cases is that we ask for 3 bills in their name that they've paid on time for a year. It could be literally anything: electricity, car insurance, cell phone, gym, cable, anything, but it has to be in their name, and they must have paid on time for a whole year. So we can use that instead of the credit. So when someone doesn't have the whole established credit or enough credit history, we can use that to help them qualify.
That's good. So no exceptions. How about somebody that is coming out of college?
What do you mean?
As in,
That
like, there's no, let's say that they got out of college and then they've been working for 1 year. Let's do it in two cases, as a W-2 and as a self-employed.
self-employed, no go.
No
You
go.
have to have 2 years. But W-2, they came out of college. We have to prove that they're working on the same, what they went to college for. And they might use the transcript, the college transcripts as, part of it, or to complete the 2 years. So that's everything. Everything in the mortgage world is a case by case. So it depends on the full picture. So someone with good credit, good work history and all of that, we might be able to make it work, but it's on a case by case
It's
basis.
very specific.
Yes.
Could be possible, but you
Right.
just gotta.
So it's not in general, hey, come out of college, work for a year, and come apply. But it's on a case by case basis.
Do you and Grid State, do you guys work in close with investors? Is that something that you personally work with?
Well, I work with anybody
Anybody?
who wants to buy a house to live in, or as an investment house, I can help. So anybody buying residential property, as long as it's 1 to 4 families, I can help.
So for the people that don't know this, could you explain to me what a in-house loan is?
Absolutely.
And
An in-house loan is just a loan that will stay in our books. So typically, when we write a mortgage loan, or when we originate a mortgage loan, we will sell it to an investor. So Fannie Mae, Freddie Mac, AmeriHome, we'll sell it to several investors, and they'll go ahead and take care of servicing for the rest of the life of the loan. Loans are sold all the time. This is just how it goes. So, but an in-house loan will be a loan that will originate and we will keep. So we will continue to service for the life of the loan.
that makes sense. And is this loan, when you mean service, what do you mean by service?
Well, after a year, your property taxes are going to change. The bank has to analyze the escrow, so things like that. So service for the whole 30 years. When your payment changes, those are the ones that send you letters, how your payment's going to change and whatnot, what happens next.
Interesting. Why would somebody want an in-house loan?
There's no specific reason why you would want one, but sometimes an in-house loans is your only option. For example, an ITIN holder, they will not qualify for a mortgage loan anywhere else unless it's an in-house loan.
Well, I didn't know that. Well, is it, I mean, to me, it just sounds beneficial to have the same place where I got the loan from come 15 years from now to just figure out what my balance is.
Well, when your loan is sold on the secondary market, it's not like you're out of the blue. You'll get communication from them. You'll know where your loan is if you read your mail. It's just that a lot of people just don't read their mail. But yeah, you'll get communication. You'll know where the loan is. You'll know what your balance is. You'll get your monthly statement anyway. So it's not that it's a bad thing, but it's a benefit to have an in-house loan for someone who won't necessarily qualify for any other type of loan.
Got it. So, other than that, there's no benefits really to an in-house loan.
It's the same thing. It's the same thing. An in-house loan may or may not have a higher interest rate, because it's more lenient than a conventional loan. But not that there is no benefit, but it is truly geared towards helping people who won't otherwise qualify.
Qualified. Yeah, got it. What about the language barrier when you sell those loans to um, other financial institutions?
Uh, I have not had a case. I would assume that
Most banks were going to
investors would
be.
have someone to communicate, but
Yeah.
I haven't had that situation where the person says, "Oh, I just can't communicate with them." There's always a way. When you go places, they'll have a language line that may be able to help you in a different language. So
Don't see it as a problem. It wouldn't. It shouldn't be a
it
stopping
shouldn't
factor.
be. I think the biggest problem is that people don't read their mail.
Mm,
Honestly, because I've had a lot of people say, I don't know who to make my payment with to, or but if you read your mail, you would have known
you will
who to
know.
send your payment to.
I
So
think it's kind of a big of a deal because also most of the paycheck is going there. Gotcha. Um, it's could you give me a briefly description of your average customer? What's the process of reaching out to you? How they get the approval, the pre-approval, and how your relationship is all the way until the end. So, what is somebody going to expect from the moment that, let's say that they qualify for a conventional 30 fixed loan, right? Very basic, but and in regards to what you do to them, what are their expectations?
well, every case is different, but all you need to reach out to me is want to buy a house. That's it. I want to buy a house. I need to know how it works. From the moment they reach out to me, we'll get that application going, whether it's in person or online. Some people prefer online, some people prefer in person. We'll get that going. Once we have the application, we'll determine whether they qualify or not, depending on different factors. And after that, they're pre approved. They'll just go back to their realtor or real estate agent, whoever they're working with. If they don't have one, I do have a few that I work with that I could potentially refer them. But most of the people I speak to have already spoken to a realtor first. Um, After that, they go to the realtor, find their house, and come back. When they find a house is when my process actually starts.
You don't give them the pre-approval
I
first?
do give them the pre-approval, but the pre-approval just states that they qualify. That's something doable. On the pre-approval stage, we look at income and debts, but we don't go in depth of their whole situation. The pre-approval just let them know you qualify. So once they have or they've made an offer on a house, then I can start. So the bank can't start a process of approving of financing for property that doesn't exist. So we do need someone to have a property first. Then our process starts. We get involved with processing and underwriting. We'll ask for every document possible to prove that this person can pay for this loan in 30 years.
Wow, that's okay. That's good. And after that, do you do a follow up or?
They'll get their house keys in 30 or 45 days. I don't, well, after closing, I do follow up like, hey, congrats on your house, things like that. But before they leave my office, they know they can reach out at any moment. So I do have a lot of clients reaching back when they get a piece of mail they don't understand, or typically that's more or most of what I get after closing. Piece of mail they don't understand, or when their payment changes, they always forget everything that I told them at closing and come back. But that's fine. It's the first time you buy a house, so
What would your payment change?
if your property taxes or homeowners insurance change, your payment's going to change.
It probably every year is going to change by a little.
Typically, not always, but it typically does change every year.
Okay. That makes sense. That was pretty clear. Um, what are some ways that people can reach out to you, contact you in case they have some sort of questions? They actually want to go into details because we do need to be some sort of general, can't go into specifics. But if people want to know like more about you, like how you can help them get their first property, or even just get them started, how can they contact you?
Yeah, they can call me. My phone number is 908-249-5706. They can email me, they can text me. I mean, yeah, however they can get a hold of me. I'm on Facebook. But whenever they want to buy a house, first, second, third, 15th, doesn't matter. Just give me a call.
Sounds good. Melissa, thank you so much for coming. I think that was
Yeah.
very valuable information, especially for that person that is renting that is not hasn't quite decided yet to even like talk to a lender. Just I guess your message is go and talk to a lender.
Absolutely. You want to buy a house? Just talk to a lender. You have to know how to get started, where to get started.
That makes a lot of sense. Melissa, thank you so much for coming.
Yeah, thank you.
If you made it this far, you probably care about real estate. So go ahead and subscribe and hit the like button. It helps us with the algorithm so more people can see this useful information. Thank you for tuning in.